JFD, just fair and direct.
Okay, hello and good morning everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Today is the 28th of October 2020. So yep, welcome everyone. Welcome to this Wednesday's morning session where we're going to have a very quick look at the markets. A few of the charts, the usual stuff, but before we do that, as always, let's quickly have a read through our risk disclaimer. So the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, a few seconds for you to read the rest and we can continue. So, okay, now then, also just before we jump into the charts, quick mentioning of our JFD YouTube channel, to which you can always subscribe to in order not to miss any of our upcoming videos. And of course, our JFD Bank website and specifically our JFD research page, which we also update on a daily basis. Feel free to visit us here on jfdbank.com and click on the research tab right there on the top, guys. So, now then, jumping into the charts. Now the first one I want to pick up here is Nikkei 225. Not much to talk about this one. I kept talking about this one from Monday and basically last week as well. What I'll keep saying, that keep your eyes on this rising wedge pattern, which, as you can see, got broken yesterday to the downside here, according to all the TA rules, of course, because such patterns tend to be more bearish. But we're not really getting that strong move lower yet. However, what I was saying yesterday, guys, that if the keep your eyes on yesterday's equities, because in a way the cash index might get driven towards the downside, but it did initially get driven to the downside, but as you can see, it kind of rose back up here, but still remains below the lower side of the rising wedge pattern. So which means that there is still a good chance for the bears to step in here somewhere, especially given the fact that the price is also trading below the 21-day EMA here, shown as the yellow line. However, I would need to see a nice daily close below this 23,382 territory first. That's marked by the low of the 16th of October, and then yes, we could consider further declines. But at the moment, it's a bit of a tricky one. I would like to aim for the downside, but yeah, it's like I said, we cannot really do that yet until we get that nice daily close below this hurdle. If we do get that, then yes, it kind of increases the chances for a potential further slide. Don't get me wrong, anything could happen, but just like I said, we're always talking about the probability, so it could increase the probability for this one to move lower if we get a nice daily close below this hurdle right here. For now, it's just acting as a good area of support. The index continues to flirt with it and continues to trade above it. However, remains outside of this rising wedge pattern. Shanghai Composite, now this one pushed higher today. The market is already closed, well, due to the turning of the clocks, of course. Now the market is already closed, and we are seeing that, well, we saw this index now is closing in the positive territory, however still below the 3,280 zone and this 21-day EMA. So which means that there is still a chance for the bears to step in somewhere around here, especially if the price struggles to get back above the that 3,280 zone or that 21-day EMA. The more let's say the more positive scenario here for me could be from a break above the 3,326 zone marked by the high of the 23rd of October, and then yes, of course, higher levels could be met. But for now, what we are looking here as at this level right here, the 3,280 zone, if that continues to provide resistance, then yes, another slide here could be possible. So keep your eyes on that one. German DAX here. Now it continues to slide, and look at this beautiful move to the downside. Everything so far is working according to the plan that I talked about previously, where I was saying that my next target is that psychological 12,000 zone. and this 11,957 mark, which is the low of the 25th of June. And if we do reach this area, then I'll take it from there, and then we'll see what the index could be up to later on. But if we look at the cash index right now, let me just quickly jump into that one. We can see that the price, the price is already below this level. So basically, this level has been reached already on the cash index, probably mainly driven by the weakness in the US equities yesterday. So yep, looking at the cash index, we are already trading below this 11,957 territory. So that means that yep, further declines are possible. And now this level here, this 11,957, could act as a good potential good area of resistance. Now when the market opens, we'll see a nice gap here to the downside, and if it does retrace back up here, keep your eyes on this level. Like I said, it could act as a good area of resistance, and if it does, then another slide is possible where my next target is the 11,598 territory, or in a way we could round it up towards the 11,600 mark, which is near the low of the 15th of June. And then yes, of course, we'll take it from there. And if that, I'm not mistaken, that's the lowest point of June as well, guys. So a good target, good potential area for test. The fact that we are now on the cash index, we're trading below this hurdle, of course, that increases the chances for a further decline. So yep, let's keep an eye on this one, guys. I mean, not everything's looking good here for the buyers. Now, jumping into another index, DXY, again, just a quick update. Still the same idea remains as I've mentioned yesterday. So what I'm looking at here is basically for this index to get out of this little kind of coiling up situation here, because it's stuck currently between these two lines. This short-term upside support line taken from the low of the 21st of October, and this medium-term downside resistance line taken from the high of the 23rd of March. Of course, this is a more important one, this downside line, but yeah, for now, like I said, guys, even if we see a small push higher, let's see if the holdup once again occurs near this downside line. If it does, then yep, another slide is possible. However, if we finally get a break of it and we see the price climbing above the 93.90 territory, now this is where more excitement could be sparked in the eyes, if I can say it this way, sparked in the eyes of the bulls, and yep, more buyers could be joining in here. So again, we are at a very interesting spot, but at the same time we have to wait. Bitcoin is well, it's on a rise. I mean, unlike other cryptos, Bitcoin is just popping higher, and basically this idea didn't work out, where I was saying that if the barrier here, this 13,174 territory, continues to provide resistance, then yep, another a bit of a correction here to the downside could be possible. As you can see, the correction didn't happen. Instead, it popped higher above this, and look at this beautiful move towards that 13,764 territory yesterday, just bang on there. This is where the crypto found resistance, and that level is the highest point of 2019. So this morning we did have a bit of an overshoot here above this level, but as you can see, this barrier now provides very good resistance. Now let's see if the same story is going to happen like it did here, for example, where the 13,174 territory acted as a good area of resistance for some time, of course. I mean, let's see if this highest point of 2019 does the same trick. So if it does, then maybe here we could see that little correction to the downside. But again, let's not over speculate on this too much, because again, I was hoping for that little correction to the downside, maybe somewhere from here, but as you can see, this level got broken, so that's why this kind of straight away removes that scenario of a potential correction. Now let's see if this highest point of 2019 provides good resistance. If it does, then maybe then we can see that little correction to the downside here. But again, for now, keep your eyes on this barrier. If, of course, if it continues to rally above this 13,764 territory, of course, yep, we'll start looking at some higher levels, but then we would need to go back into, well, let me just kind of zoom here a little bit. So probably, well, I mean, we'll have to go and search for a good potential level right here, back in 2000, which we had back in 2018. And as you can see that the crypto is slowly grinding higher here back to these levels, back to these strong levels where we were in the end of 2017 and then around the beginning of 2018. So basically what you could do here, guys, is of course keep your eyes on that psychological 14,000 level as the next potential target, but also keep your eyes on this little high here, the high of the 13th of January 2018, and that's roughly around the 14,580 zone. So good potential target. This is where a holdup might occur. Slightly above that, we do have another potential little target right here. This is the and look at this beautiful level here, bang on, almost bang on this 15,000 mark. So 14,999. That's the that's the area that we could keep an eye on. Now this is where it could become quite interesting. However, given that the number is quite an interesting one, the 15,000 mark, don't get caught up in that, because sometimes if, let's say, this continues to rally and the probably everybody will start talking about that nice beautiful 15,000 number. So this is where it could in a way kind of cause a few issues for everyone. If the crypto travels higher, tests the 14,580 zone, struggles to overcome that straight away, reverses back down. This is where a lot of people would get caught out here, because everybody probably would be expecting a push towards that psychological 15,000 zone, and then yes, a bit of a correction here could be possible. But again, that's just an idea. Sometimes that happens, guys, when we are approaching nice beautiful numbers, yeah, sometimes the instrument just kind of finds good resistance near just slightly below that nice beautiful number. So keep that in mind, but of course keep that in mind if we get a nice strong move above this highest point of 2019. If it struggles to do so, then, well, I mean, like I said, we could maybe see that little correction a little bit earlier. Now jumping into Aud Cad, now jumping into a few pairs, and as you can see, I have a few of them that I wanted to quickly run through. Now the first one is of course Aud Cad. Now here today we saw a nice boost here for the Australian dollar. Australia's CPIs came out slightly on the better side. I mean, the year-on-year for the Q3 year-on-year inflation figure came out the same as expected, 0.7, but the quarter-on-quarter one came out slightly better by 1/10%. So let me just quickly double check that. Yes, that's correct. So the expectation, the forecast was 1.5. The actual number came out at 1.6, and that's of course a great result. Not to mention the fact that the previous number was even at minus 1.9%. So this all gave Australian dollar a nice boost here against its some major counterparts. Not all that. I think that there's one that it's not really performing well, but in general, the Australian dollar is doing showing good results. And the most important here from the technical side, this is what I talked about recently, guys, that wait for this one to break, for this downside line to break in order to consider some higher levels. But if you're more on the cautious side, wait for at least a pop up of the 0.9450 territory right here, and yep, then we could start looking at some further acceleration to the upside. For now, I'll remain somewhat bullish, and I'll continue targeting this level here, then 0.9450, and then we'll take it from there. If it does pop further above it, then yes, that's wonderful, good news for the buyers here. But if this pair somehow drops back below this little inside swing high here near the 0.9366 zone, now this is where we could maybe consider a bit of a decline. However, as I mentioned to you previously, that just to be a little bit more maybe on the cautious side, on the careful side. Also, you could wait for a drop below the 200-day EMA here, shown as the black line. But again, we could start looking already at the downside if we get a drop below the 0.9366 territory. So again, keep your eyes on that one. It could be quite interesting, but at the moment everything's kind of leaning a little bit more to the upside. But yep, like I said, this is the level that I'm watching next, the 0.9450, and then I'll take it from there. GBP Aussie, you can see that yes, there was a bit of weakness here in GBP Aussie, of course, due to the strengthening of the Australian dollar. However, this idea that I drawn previously still remains in play. Now, again, don't get me wrong, I mean, that maybe contradicts the idea of the Aud Cad, but yeah. For now, looking at GBP Aussie, let's see which one will outpull which. And if we get a break of this upside line here, taken from the low of the 11th of September, and then a drop below the 1.8180 territory right here. Now, this is yes, from where I will start looking at the downside. But if we don't, then this keeps a bit of an opportunity for the bulls to step in still. So yep, so one part of this idea, initial idea, kind of is working out. So yes, we did get a correction towards this upside line, but now let's see if we get a rebound. And to be a little bit more on the safe side, what you could do here is keep your eyes on the current highest point of this week near the 1.8330 zone. A nice good pop above it, yep, may open that door towards higher levels. But again, for now, let me just adjust the arrow here. Basically, this is the little idea that I'm going to keep an eye on. So yes, for now, like I said, for now, keep your eyes on this one, and keep your eyes on this barrier, the 1.8330. If a nice good pop above it may open the door towards higher levels. If it doesn't drive there, instead it falls below this 1.8180 territory. Now this is where we could start looking at the downside, guys. Now jumping into USD Jpy, continues to drift lower. Yesterday we had a nice drop here towards this upside line. Look at this. This is where the pair found good support, and today we're seeing a further move lower. And to be honest, everything's kind of working out with my downside scenario so far. And the idea that I've mentioned previously, guys, in the beginning of this week, that keep your eyes on this potential bearish flag here, with a pole being the 21st of October and this little consolidation being the little flag. So so far everything's working out nicely according to the plan. So yep, to be honest, I will continue targeting the downside unless this pair somehow reverses sharply back up here and stays above this this upside support line. If it does, then maybe, well, the downside could be slightly off the table again. But at the moment, at this point in time, everything's kind of leaning more towards the towards lower levels. But of course, if you want to get a little bit more comfortable with that idea, wait for the daily candle to stay below this 104.18 territory, and then yes, we could, like I said, get a little bit more excited with further declines. But again, like I said, for now, it is how it is. Unfortunately, it's yes, it's leaning more towards the downside, but it's just still flirting with this area here. So yeah, so let's be very cautious around here. Now jumping into a few exotic ones, and quickly I wanted to pick up here on a few. Just a quick update in US dollar against the Russian ruble, and here basically I do like to look at these, some of these nice kind of exotic pairs, because these tend to be very technical. And look at this beautiful pattern here. Basically, last time when I picked up on US dollar against the Russian ruble, I was saying that first of all, we broke this upside support line taken from the low of the 23rd of June. But what I was saying then is that keep your eyes on this potential other pattern, which could be this falling wedge pattern. And of course, as according to all the TA books and rules, and these tend to be more bullish patterns. So so yep, this is the kind of little picture that we're getting right now, because you can see that the rate is climbing back above this upside support line. So in a way, this kind of increases the chances for this falling wedge idea working out. So but as I've similarly as with the Euro GBP, I would prefer to wait for a break through one of the key resistance levels first. So basically, I would like to see a push above the 78 territory first, and then get excited about higher levels. Of course, yes, a violation of this downside line, of this upper side of the falling wedge, yes, could increase the chances for a possible move higher, but just to be a little bit more on the safe side, a push above the 78 territory could do the trick for more buyers. US dollar against the South African rand, and here is a little bit of a different situation, to be honest. I mean, because here the South African rand, it seems to be a little, well, holding out better than the Russian ruble here. So basically, for now, I'm still keeping an eye on this idea that I mentioned recently, this potential idea of seeing a drop lower. However, to get excited with that downside, a drop below the 16.0850 territory here, marked by the lowest point of September, would be needed. And ideally, a nice daily kind of candle staying below this area could do the trick for more sellers. But at the moment, we're seeing a bit of a recovery here, so that's good news for the buyers. However, good news for the buyers could come in on a break of this little short-term tentative downside line taken from the high of the 29th of September, and then a push above the 16.4020 territory right here could attract a few more buyers. And up until, of course, we would drive this one higher up until this other downside line. But let's get to that point first. Let's see if this downside line gets broken. And let's see if this barrier gets, or this barrier surrenders to the bulls. However, if this little short-term tentative downside resistance line remains intact, yes, keep your eyes on this 16.0850 territory, and I could drop below it. Yep, could open the door towards lower areas, and because this would also confirm a forthcoming lower low. Now, euro against the Turkish lira. A quick update here. Again, as I was saying from the beginning of this week, it's a one-way traffic here for now. I mean, and to be honest, I am really considering right now that psychological 10 zone. Of course, don't get me wrong, maybe now a lot of people are looking at that psychological 10 zone. So let's see if we can get a reversal somewhere, but at the moment it's difficult. It's really difficult. For now, yes, at this point in time, I'm going to be targeting that psychological 10 zone, and if I'll take it from there, guys, because like I said, for now it's a difficult one. And if you're shorting this one, well, it's I would say it's a bad place to be right now, and unless you're scalping maybe, but again, even then, still the trend is for now to the upside, and we haven't seen a nice reversal yet, so be very careful with that. Now, Euro GBP, this one is a mess. I mean, as always, I always said that Euro GBP is a huge mess, but at the same time, it remains attractive for traders because it sometimes does present itself with nice opportunities. Now, it didn't really manage to go further above this 0.1990 level. Instead, it reversed back down, and now it's testing this support zone near the 0.9025 territory. Or actually, let me now adjust something here, because this 0.9025 level kind of is not the probably correct one to keep an eye on, but just out of cautiousness, I would say I'll keep an eye on the low of the current lowest point of October near the 0.9007 level right here, so not far from that psychological 0.90 territory. And basically what you could do here, if we get a drop below this area, then yes, this would confirm a forthcoming lower low, and a next potential target is this 200-day EMA. So again, we do have a few days left, trading days left for October, and particularly in particular 3 days together with this one. So yeah, let's see if this pair can actually form a new low for October. And for that, it would need to overcome this 0.9007 level. And finally, EURUSD. So EURUSD is finally getting out of this little range that I talked about, and you can see that the pair is dropping below this 1.1787 territory. It's currently trading below it, so this increases the chances for the bears to step in here and potentially drive this one towards the 1.1696 territory first. However, as I mentioned to you previously, that the more comfortable level after break of which I could consider further declines is, of course, a break of this 1.1696 level. But let's keep it short and simple from the very short-term perspective. For now, The pair seems to be willing to move further south. Of course, if it somehow gets back above this 21-day EMA and above this 1.1787 territory, then we're back in the neutral zone. But if it climbs above this barrier right here, the 1.1867 territory right here, now this could be a bit of a totally different game here for more buyers, and more of them could be joining in here. But again, as I said, be very careful. For now, we're leaning a little bit more towards the downside here, given that the pair is trading below this 1.1787. Of course, we'll be very careful. We'll have a tight stop loss. For example, the stop loss here could be somewhere around here, maybe even actually not this 1.1787, but maybe somewhere around here, because if it pops above this 1.1803, or even actually that 1.18 level could be a nice good area for a stop. But again, you guys do whatever you're more comfortable with. This is just an idea, kind of, I mean, might work out, might not. So be very careful, be very cautious here, guys. And yes, let's see how this is all is gonna play out today. But one thing for sure, I really appreciate your time, guys, joining in and watching this one till the end. I really appreciate it. I really do. So thank you very much for doing that. So I hope you have a successful day today. Stay safe, have your stop losses in place. And yeah, if you want to join my video later on, my traders tea time, 14:15 GMT time as always. And yeah, we'll take it from there, guys. Thank you very much, and bye-bye.